Welcome to Macro Hive Conversations with Bilal Hafiz. We aim to bring you the best in macro and markets thinking. To see our latest thoughts and analysis on the world, visit macrohive.com. The listenership to our podcast show is growing, and I'd love you to spread the word. To help, make sure to subscribe to the podcast, rate us very highly, and tell your friends about the show. Also, we recently recorded our first ever webinar where I talked about my market views. Hopefully, you can access it on the Macro Hive site. If not, just email me on bilal@macrohive.com. Bilal is spelled B-I-L-A-L, and I can tell you more. And many people have been asking me about our Slack channel, where the Macro Hive members exchange views and ideas with each other. When you sign up to the site, you'll get access to the Slack channel. It's part of the membership. So make sure to subscribe at macrohive.com. The first month is free, and then it's the weekly cost of a few cappuccinos, and you can cancel anytime. On this episode, I have John Kay. I wouldn't do full credit to John to describe his credentials, but he's one of the UK's leading economists. He's the author of many seminal books in a wide variety of topics, from the tax system to corporate strategy to banking. He helped establish the Institute of Fiscal Studies, a leading non-political think tank in the UK. He's a fellow at St John's College, Oxford, and was the first Dean of Oxford Saïd Business School. On to our conversation. So welcome, John, to our podcast. It's a great honor to meet you. I've been reading your books since my student days, so it's great to actually speak to you in person.
Hi, good to be with you, Bilal.
I should say when I say in person, I mean via Zoom, these days.
We're still social distancing.
Well, one thing I wanted to start off with, John, is you've had quite a varied career. And, I'm trying to think of how I could define you. And it's hard to do that. You're an economist. You look at corporate strategy as well. So in that sense, you're kind of more micro, not just macro. You've been involved in setting up and running think tanks, advising governments. So there's kind of a political side to it all. But what was kind of the beginning of your career? Where did you start and how did you end up where you are now?
The real story is of me as a rather theoretical mathematical economist going back to the 1970s, then getting involved with James Mead on a Mead report on the British tax system. Through that work, ending up as director of the Institute for Fiscal Studies. And that was when there really weren't very many think tanks, and setting up a politically independent think tank was an interesting challenge. But what I was discovering then was what I seemed to be quite good at, was taking fairly complex economic ideas and putting them over to a general audience. And by the mid-80s, I'd thought, if that's something one can do in this policy context, maybe it's something one can do in a business context as well. So that's how I got into setting up an economic consultancy and thinking about business strategy. So that's the trajectory that took me there. And actually, if one was an economist who was interested in these kind of issues, one was pretty quickly in the last couple of decades lured into finance as well. So that finance and business have really defined my interest for the last, 20 years. And also, having sold out of the consultancy business, it left me free to do pretty much what I wanted. So I've really focused rather on writing, which is the thing I've been most enjoying.
Yeah, okay, no, that's great. On finance, I really liked your book, Other People's Money, which kind of captured the feelings, but articulating it in a really good way that many people had towards the financial sector after the financial crisis.
Yeah, what is it all for?
Exactly, yeah.
How does it actually meet the needs of businesses and households?
Yeah, exactly. I guess perhaps what we can start off with is, and it's hard to ignore the coronavirus and COVID. You've done a lot of work over the years in terms of, what's the sort of the best way of structuring the economy and the interaction between the state, the household sector, and the business sector in a way that works well for everybody. And, I suppose the coronavirus has brought about lots of kind of changes. One is it's led to much more state intervention in all our domains, whether it's our sort of personal movements, the amount of different types of aid packages that have come about, and so on. Do you think that the policies that have been put in place around coronavirus will in some way change the trajectory of what the possibilities are to restructure the economy? Or do you think this is more of a temporary blip and then we go back to where we were before?
think it's more of a temporary blip, but there are quite a lot of things I think we can learn, and I hope we will learn from this. One is the ways in which we use models and information, and we've not managed the interaction between science and modeling and policy making very well. And that's something I think when things settle down a bit, we need to have a large debate about. Another thing which we have, I hope, learned from this is that the book Radical Uncertainty, which I wrote with Mervyn King, we talk a lot about the ways people handle uncertainty involving robustness and resilience. And what has happened in the last year has really brought home, I think, the point that the things that create robustness and resilience, which are managing interdependencies and limiting them so that the collapse of some item doesn't mean the collapse of the whole structure, and redundancy, which means building in a bit more tolerance than you think you will need. These are things that we've thought of as sources of inefficiency over the last 3 decades, and I hope we're learning that we need them. The other interesting question, which comes to some of the issues about individualism and the like, is, on the one hand, you were talking about government having intervened pretty vigorously. On the other hand, a lot of what happened in response was people were very ready to do things voluntarily in order to handle it. And indeed, the countries which have probably managed the coronavirus best at the moment, well, it's interesting, they fall into 2 groups. One is the societies that have very high degrees of social cohesion, places like the Scandinavian countries and New Zealand. And the other is ones where there is a rather authoritarian, effective state, some of the countries of Southeast Asia. I mean, Singapore would be the absolute archetype of a society like that, but South Korea, Taiwan, and the like fall into the same kind of category. And we don't fall very well into either of these categories. That's perhaps why our record has been not very good.
Yeah. I mean, there's a couple of strands I just want to pull out from what you just talked about. One is the relationship between, I guess, policymakers and science. I do often, speak to politicians and MPs and even cabinet ministers, and it just sort of strikes me how many lawyers there are, or journalists, in terms of their training. And so I suspect that's probably one reason why there's this compatibility with science. But what would you kind of say a country like the UK could do to try to be more in tune with science or be more comfortable?
It's an interesting question you raised there, because if you ask what is the skill of a good lawyer, it's very large the ability to take a complex problem, reduce it to essentials. So why aren't people good at doing that in a situation like this? I think part of it is a kind of diffusion of responsibility, that really the decisions are and ought to be made by politicians, but politicians want to take cover by saying, if you don't like what we're doing, we're following the science, not me gov. But the other is that Britain, and I'd say particularly England in this, is actually a society that allows people to be educated to very high levels while having very low levels of numerical and scientific skill. I've always remembered an occasion, I was talking about career as an academic in the 1970s and getting involved people in issues about the British tax system. I remember once writing down in some note I wrote an equation, and it was about as simple as it could be. It was A equals B plus C. And what intrigued me was not just that there was a very senior retired civil servant and a very senior lawyer on the group, and they didn't understand what this meant. It's not just they didn't understand what it meant, it's that they thought the idea that they could understand what it meant was kind of hilarious. If I turned that the other way around, if I'd used words or made literary references that people didn't recognize, they'd feel embarrassed. Whereas people in these kind of positions feel no embarrassment about being able to do the simplest arithmetic, not being able to do the simplest arithmetic, far less deal with complex mathematics.
Yeah, that's interesting. Yeah, so that kind of goes back to, I suppose, some kind of flaw in our educational system where for some reason we veered away from certain basic hard skills, I suppose. Not hard skills, but skills.
Yeah, and I feel I benefited from this from being at school in Scotland, where one was required to do both maths and science and humanities subjects up until the time you left school. So there wasn't the degree of early specialisation which there is in England. And countries I think differ in this, that much of the US is not very far from the English position on this, whereas France and Germany, for example, would be rather different.
I come from an immigrant background, so my parents originally they're from Pakistan, and so when I was growing up, my parents would just do sort of maths drills all the time. It was like non-negotiable. You had to know your times table up to 20, the 20 times table at a very young age. It was maths. So it was ingrained for me from a very young age that you had to be very numerically literate. And I guess you kind of see that in lots of Asian cultures as well. The other thing you did mention was inefficiencies in relation to fragile systems, or the need to build in a resilience and redundancies into systems. Now, this inefficiency, why do you think there's been such an aversion to building redundancies, or some people would call inefficiencies over the sort of the decades?
I put it down very largely to short-term earnings management. What matters is meeting the quarterly earnings numbers. You're not going to invest a lot in providing against risks that are almost certainly not going to happen in the next 3 months, or even in the next 5 years, which would be your typical tenure as a CEO.
Yeah. And, there's been a lot of comment or critiques of short-termism, over the decades. I mean, is there a way to overcome that? Because the market, and I live in financial markets all the time. It's such addictive, supposed real-time barometer of how well you're doing as a company, or apparently well. How do you move away from that short-termism?
Well, you start by recognizing that it isn't a barometer. I was reading something a few days ago, which was an interview with Sandy Weil, who's the CEO of Citigroup back in 2000, and it said he had a monitor on his desk that showed the constantly changing stock price of Citigroup. And if you just stand back from a moment and understand, you say you're CEO of a very large, very diverse business, and you have access to people who have the most amazing information about almost everything that's going on in the world. And do you really think you're learning something important by watching by our movements of your company's stock price? I don't think so.
Yeah. I mean, and why do you think it's been so hard to reform? I mean, in the UK, there's been lots of committees and ideas around how to reform this. And, there's been talk about financial transaction taxes, different governance approaches. People look over to Germany to kind of look at sort of stakeholder capitalism. Why has it been so hard in the Anglo-Saxon economies to do much about this?
I think we've moved to some kind of stakeholder capitalism. It's really the extent to which business has become more and more oriented towards financial markets and what's going on there. I mean, in a sense, the CEO with a monitor showing the stock price on his desk exemplifies the problem. The guy who's getting information from that could not be thinking about the long-term prospects for his business. In that case, he didn't. We know what happened to Citigroup, what after a while retired.
And I guess in some ways this goes to your latest book, which is Greed is Dead, which takes on head on the idea that self-interest, economics man, utility maximizing agents, the way economists talk about these sorts of things, that if everybody's acting on self-interest, you kind of align people's bonuses to their performance, then you end up with an overall social good. And you talk about this in your book in a lot of detail. And at the same time, you also directly mentioned how over the COVID period, we did have this outbreak of volunteerism. So there was this, seeming altruistic urge to help each other. So do you want to talk a bit more about, reconciling all of these?
Yes. I mean, this model of rational economic man really does not describe how we're hardwired, basically, to behave. And the distinctive thing about human beings is their pro-sociality, essentially, where we naturally both compete and cooperate. Successful economic systems and successful businesses are the people who are the ones that actually succeed in harnessing both of these in a constructive way. And you can do that in a successful economy or a successful business. In an unsuccessful one, cooperation and competition actually work against the success of the institution. It's the world in which you are competing to get your part of the pie from other people, both within the organization and in relation to your transactional dealings with other other businesses. And you know very well, and your listeners will know from what happened in the financial sector, how destructive that kind of thinking can be. And I've always liked the business of Bear Stearns having the sign saying, "We make nothing but money." And of course, the organization that made nothing but money didn't end up making very much of that in the long run.
Yeah. Do you think that society has become really more greedy over the last 30, 40 years? Has it become more individualistic over the last 40 years?
This kind of thinking, exemplified in the greedy kind of remark. If you design institutions on the basis that people are naturally greedy and the only thing which will motivate people to do the kind of things you want to do is to give them financial incentives, you will end up, firstly, with a kind of people who are only interested in financial incentives. And secondly, even if people have broader interests and more intrinsic motivation, they will be more inclined to behave in this kind of self-interested way. But actually, to repeat, we're naturally pro-social, and successful businesses are ones that manage both the competitive drive and the cooperative drive effectively. I've never forgotten, actually, occasion on which I asked a retired CEO to come and talk to my class at London Business School. At the end of it, he said to me, these kids regard being chief executive as a prize rather than a responsibility. I thought in that one sentence, he put his finger on something that had happened over the last 4 or 5 decades, something that has run right across the business sector and which is really responsible for quite a lot of the short-termism we're talking about.
I suppose from a kind of narrative perspective, what supporters of this kind of neoliberal type thinking would say is that things were very bad in the 70s. The unions were everywhere. Nothing was working. The country wasn't working. We had the winter of discontent in the late 70s. So the country needed a reboot. It had become inefficient, corrupt, at various levels, too centralized. And so that's kind of the narrative that you needed to break away from that. And then hence, we had all the reforms thereafter. Underlying that, there's a view on what went wrong in the 70s and how to fix it, I suppose. So, how do you view the 70s then?
I wouldn't disagree with the depiction of the 70s as a pretty disastrous economic decay, or that much of the return to free markets was a good development. But I think the strongest point I would make on all of this is that we need to understand why it is that what one might loosely describe as market systems have actually been the only economic systems that have generated sustained prosperity. And for me, it's not because greed is good and the way to make societies function effectively is to encourage people to be very greedy and impose as few restrictions as possible on what they do. The strength of a market economy, in my mind, is what I've called disciplined pluralism. It's the idea that you're free in business and finance to try new things out. That's what I mean by pluralism. Discipline in the market economy, which says if they don't work very well, they're closed down. And if they do work well, then other people imitate them. The reason centralized planned economies worked so much worse is that you typically had neither pluralism nor discipline. There wasn't much freedom to experiment and try new things. And equally, there wasn't the discipline that says if this isn't working, we stopped doing it. And that was true of nationalized industries in the UK, just as much as it was true of the overall economy of the Soviet Union.
Yeah, understood. And, I suppose one of the economic features we've seen of the UK, and not just the UK, most Western economies, has been anemic productivity, not even just over the last 10 years, but even before global financial crisis. What do you attribute to that incredibly low productivity that we see? At least in the observed data, that seems to be the case.
I think you've made the point of in the observed data, one of the big questions that raised, what extent does the observed data tell us what's really happening? So much of the structure of the way in which we compile our economic data is the product of an era in which manufacturing was a very large part of total economic activity. And you measured output in that kind of way in relation to production functions and so on. So I'm skeptical about whether we really have the rather dismal experience on productivity that the data seems to show us. If we're talking about productivity and innovation at the moment, I would feel rather bullish because I think the story of the decades since the 1960s, I think, have been of rather slow technical progress outside the area of information technology, where dramatic. But what we're starting to experience, and I think we'll see a lot more of in the next 20, 30 years, has been the application of information technology in industries that superficially don't have very much to do with technology at all. And you can see that happening in the moment at one level, at being able to call a taxi by pressing a button on your phone, but more fundamentally as you go on to autonomous cars, or the way in which healthcare is going to be transformed by the use of information technology to do things that have been simply impossible for medics to do in the past. And I think these things are only the beginning of a new revolution. It's like electricity when it became available commercially. For first decades, it was mainly used for lighting, and the idea that you'd be able to use electricity to clean your house or do sums for you would have seemed utterly extraordinary to people in the 1890s. But it's what happens constantly now.
Yeah, no, that's interesting. And, I also found in your book the way you talk about another aspect of individualism, aside from the economic self-interest, greed is good, is also this focus on individual rights and activism and so on. I mean, typically people don't put the two together. They don't put them in the same grouping. You kind of say there's the so-called capitalist neoliberal camp, and then you have the activists on the other side who are against that. But you kind of find a commonality, at least between segments of each side. And so what was your thinking behind that?
You're right. There's a kind of right-wing individualism, which is about free markets and greed and abolishing regulation, and a leftist individualism that is about the performative activities in which I'm endlessly talking about my rights, imagining myself as a victim, and even talking about intersectionalities, the multiple ways in which I believe myself to be victimized. They're both different kinds of individualism, and what is missing from both is the realization that agency in the economy and in society is not actually polarized between individuals and the state. Much of what we do is by pro-social groups in firms, in communities, and the like. It's at the kind of banal level. Of a few months ago, I tripped up in Oxford Street and fell rather awkwardly, and certain amount of blood and so on. And of course, 3 or 4 people, I think none of whom were actually native English people, came to help me get up and get in a taxi and go home and so on. And I thought that's the reaction you would expect in a thriving community. And it's a very different reaction from the one I would have got if I'd lain there on the pavement shouting about my rights. I had been shouting about my rights, and the only people I'd have had these rights against would have been the state. So the people that had helped me at all, it would have been to call an ambulance. The responsibility for dealing with the situation over to some government agency. That just isn't how pleasant or thriving societies operate.
Yeah, and so I guess from a policy perspective, then, what would be some of the implications of this viewpoint of, both this individualism at the kind of the economic level and the right side? I mean, what would you advise the government to do to try to recognize the fact that we identify more with kind of these smaller social groups and units, and that's a way we often interact with each other?
Yeah, and we've become massively over-centralized in this country. And if we start thinking about the causes of the kind of populist revolts which we've been seeing, I think this is very largely a part of it, that we actually function in communities typically. And in The Greed is Dead, we talk about the 2 key kinds of communities, which are communities of work and communities of place. And also people like you and me, and most of the people who are on this call, are what David Coulthard has usefully called anywheres, as distinct from most people, or he describes as somewheres, that even in Britain today, most people still live 20 miles from where they were when they were 15. And that's not true, I suspect, of either of us. It's not true of most of the people we're talking to. But that's the reality of most people's ordinary lives. And it's the way that they want it to be. So that the London-centeredness of the UK, for example, whether it's in politics or finance or culture or everything else, is something that has hollowed out these kind of traditional communities.
Yeah, I see what you mean. And I guess in many ways that kind of fits into this very economic way of looking at things where you see people as just almost like mechanical units, which you can just move around the board just as easily. You can move a worker from one place to another or sack them and then employ it somewhere else. It's kind of part of that same philosophy and not recognizing that rootedness that people have. And so your sense is that this kind of centralization and this lack of recognition of the importance of place is partly behind the rise of populism in recent years.
Very much so. We in the book we take the examples of two of the typical constituencies that elected Conservative MPs in 2019, but were constituencies where 50 years ago you really didn't have to bother counting the votes. The Labour majority was so overwhelming, and they were Don Valley near Doncaster and Stoke-on-Trent. And these places are just representative of what has happened. That Don Valley was a traditional mining area. Mining is a pretty horrible job, and I'm glad people don't go down the mines anymore. But mining went with a very strong sense of community. And Stoke was a city whose famous industry was ceramics, and it was a global leader in that. Now, the mining industry no longer exists. The ceramics industry does exist, but production has basically now gone to Asia. And importantly, people in Don Valley and Stoke North are not poor. These are not particularly prosperous constituencies, but they're by no means the least prosperous in the UK. And unemployment is not particularly high in these areas either. But employment is different. Employment, the largest employer in the Don Valley area, the largest industry is actually logistics. It's a transport hub and therefore a warehousing centre. And probably the largest employer is Amazon. In Stoke, the largest employer, slightly unbelievably, is Bet365, which is the online gambling site. And these are, in one sense, perfectly good jobs. They're jobs and they pay reliably and they pay even tolerably well. But they don't create the kind of sense of community either at work or in the institutions, the clubs and the like that gave these places their vitality half a century ago. And unless we kind of revive the self-confidence of these kind of places, we're not going to have a society that is cohesive either economically or socially or politically.
And so I suppose behind that, then, you're implying that we should devolve more power and autonomy to these regions.
Absolutely, yes.
And, I guess in the UK, at least, we've had devolution to Scotland and to Northern Ireland, to Wales. And maybe Scotland's kind of a special case, but, what that has done in some ways is it's also led to a potential independence movement for it to break away from the UK. So there is kind of the other side of devolution that if you push it to its limits, it could cause the country to break up.
Yeah, maybe it does, but if that's what people want in the end, so what? It's interesting you take that example because Paul and I writing this Greed is Dead, Paul comes originally from Sheffield, whereas I originally come from Edinburgh. And Edinburgh is probably the most successful city in the UK outside London. It's vibrant, prosperous. Sheffield does not rate in that kind of way. So we've been very conscious of that distinction. But there's no doubt in my mind that whatever else one thinks about devolution of independence, that the devolution of power to Scotland has contributed to that. Edinburgh is a much livelier city in a variety of ways than it was when I was a schoolboy there quite a long time ago.
And if we take, say, the US, US has a federal system. And, this is, I guess, one of the critiques of communitarianism, which is that, you could have states which don't adequately treat people from minority groups or even gender, that equally. And so you kind of do need some kind of universal rights or country rights that, cross through the devolved regions or states. How do you think about that?
Well, I think you're right there. And we do need to have some, if we're a single entity, or actually even if we're not a single national entity, because we've created organizations like the EU. And it's interesting to think of the EU in that kind of framework, because both people who are supporters of the EU and opponents of the EU tend to think of it as something that is aiming at creating some kind of single, reproducing the nation state, in effect, at a European level. And some people want that and others don't want it. I think that's the wrong way of looking at it. And it's a way of actually having decentralized power and with coordination. It's about subsidiarity. trying to do things at the lowest level at which they can be performed effectively. And for example, the German state probably manages this rather better than the others we've been talking about, in terms of having many regional cities which are successful, not just one, and having a great deal of variety and vibrancy across different Länder and across the country.
I mean, that's a good point, because when you look at the independence movements within Europe, whether it's Catalonia, Scotland, I mean, all of them, as part of that independence movement, do talk about we want to continue to be members of the EU. So there's this idea that, on the one hand, they are kind of moving to smaller sort of units, but they want to be part of a broader set of rules, to enable them to flourish.
Yep, and for both Scotland and Catalonia, the existence of the EU, in a sense, makes independence, in inverted commas, more plausible than it did if there wasn't that kind of supranational institution. In a sense, I said independence in inverted commas, because the reality is the amount of independence which you can have in today's global economy as a small country, or even as quite a large country, is quite limited.
And, actually speaking of global power, I'm not sure if you've looked at, the model of China that much, because China in some ways is kind of paradoxical. It seems quite highly centralized. It's done incredibly well economically. Is it a case with China that they were centralized and that allowed them to initially get the low-hanging fruit to grow to sort of middle income status, but now they'll need to move more towards more of a decentralized market-based system for them to jump to the next level higher? I mean, how do you view sort of the China case?
I mean, if one views China in a kind of scope, long-term historical scope, there's this issue which Peter Pomeratz, the historian, called the Great Divergence. It's the question of why did the Industrial Revolution happen in Western Europe at the end of the 18th century and not in Southeast China, which had many of the same resources and capabilities and so on. Right, I'm persuaded by the argument that a large part of the answer to that was that China was centralized and Europe was not. So this goes back to when I was talking earlier about disciplined pluralism, that there was this freedom to experiment with new ways of doing things in Europe that had been largely eliminated in that centralized Chinese system. So actually, when one looks at the rise of China over the last 30 years, in a sense, its problem is not why they've been growing so fast, but why their income levels were so low for so long. It's what I've called the sherry problem, when I did some work on why the demand for sherry in the UK was declining. And after a bit, I realized this was not why it was declining. It was why it had ever been so large in the first. And there are a lot of countries about which that is true. I mean, Ireland, called the Celtic Tiger for a decade or so. But actually, interesting question about Ireland is why, after independence, Ireland did so badly for so long, and its relative position to declined relative to the UK, whereas now it's like a spring being released. It's caught up and uncoiled. And that's kind of what we're seeing in China. So you've raised the question of where does this go from here? If my thesis is right, that disciplined pluralism is the primary thing that matters in the long run, it's hard to believe that the centralized authoritarian state, which we now have there, and so large a centralized authoritarian state, can actually survive in the long run without reinventing itself in some variety of ways, but a couple of centuries.
We'll see. And, moving back to, businesses, you did write a book called Other People's Money, which kind of raised the question of what is the point of a bank in the financial sector. I mean, what's your view today, now that we've had the 10 years has lapsed since the financial crisis, there's been various reforms, balance sheets have been improved and all those sorts of things. And there's been certain limits on bankers' pay and things like that. I mean, do you think we're in a better place with the financial sector?
I think we're in a better place, but not much. And we haven't really answered the questions which, I raised in that book, which is what is the financial sector actually contributing to the non-financial economy and to business, non-financial businesses and households. And I think the answer remains that a large proportion of what happens in the financial sector contributes very little to either.
And so I guess from a policy perspective, I mean, what types of things would you suggest to kind of align it more to the real economy?
It's a complex question, because when I talk to kind of general audiences about this, they always want to say, of course, what we need is more regulation of the financial sector. And I don't think that, not for the reason many people in finance do, which is they think they're doing a great job if a regulator would let them alone. It's rather that I think regulation has created many of our problems in two senses. One is that regulation tends to protect incumbent institutions. So there are regulatory initiatives, sandboxes and so on that encourage fintech. But I think useful fintech would have happened much faster if we had less regulation. I was always intrigued and going to Kenya and by the success of M-Pesa, the mobile banking system in Kenya. And when asked how could it be that in this sense Kenya was far more advanced than the United States. And I came to realize that the answer really is that no one in Kenya grasped how big this was going to be. And if it had, incumbent banks and regulators would have moved to stop it. And yet it's an innovation that has transformed finance for ordinary people in Kenya and in several other poor countries. So regulation very largely gets in the way of innovation, but it also spawns the wrong kind of innovation, which is the regulation and the innovation which is about effectively circumventing regulation. I mean, the classic illustration is the way in which the origin of credit default swaps was essentially to regulatory arbitrage the difference between the reserve requirements imposed on banks and the reserve requirements imposed on insurance companies. It was an innovation which then took on a life of its own, a very useful one in the end.
Yeah. And then more broadly, what do you see as the role of business in society? There's that kind of Friedmanite view that it's the job of business just to make money, make profit for its shareholders, and everything else is subservient to that. I mean, what do you think is the role of businesses?
I think there are two fundamental things wrong with that Friedman doctrine. One is that in the long run, it destroys the legitimacy of business as an activity. And we really see that at the moment where people dislike big business. You have the paradox, really, of Facebook and Google each have 2 billion customers, which is more than any company before has ever imagined having. But yet you can hardly pick up the paper without reading some critique of Facebook and Google. So we have that paradox of business legitimacy there. And the other is what prompted me to write that little book Obliquity, which was actually that the way you maximize profits is not necessarily to set out to maximize profits. And the people who actually created masses of shareholder value are the people who set out to build fabulous businesses, not the people who set out to generate shareholder value.
Yeah, and I guess if you read Jeff Bezos's shareholder letters from the get-go, I mean, he was very clear that, it's a long-term game for him. He won't generate profits. And, and he kind of stuck with that. And it's ended up being a very successful company on its own terms.
That's right. And you would say the same about Google and Microsoft and Facebook and all the companies that have changed the world so much in the last 20 years. And you go back another half century and ask what people who built General Motors or General Electric or Marks and Spencer were doing, or Sam Walton. I mean, Walton said, I set out to create the finest retail business I could, period. Making a large amount of money was never a particular goal of mine. And to the end of his life, he drove himself around in a pickup truck.
And actually, on a more personal note, then I should ask you, I set up, Hive about a year and a half ago. We've grown over that time, got a staff of over 10, 12 people now. What advice would you give to people who are in the early stages of their businesses? I mean, you've studied businesses, you've had your own businesses in the past. I mean, what general advice would you give?
I suppose the general advice I'm giving, one piece of general advice, set out to build a great business, because that's what will get pleasant people you have enthusiastic about working for you, working with you to create that business. And the other lesson is don't take your business plan too seriously. That's setting up with about half a dozen things I thought we should be doing. 2 of them worked and the others didn't. That's trying to apply disciplined pluralism to oneself, of saying to try a whole range of things and be pretty firm and robust about jettisoning the ones that don't seem to be working.
Yep, that makes sense. And actually keeping it at the more personal level, I mean, I've seen your output is really quite phenomenal. I mean, this year you've had two books out, one Radical Uncertainty with Lord Mervyn King and Greedy is Dead. I mean, what's your approach to managing information, research, and keeping your productivity high?
Productivity isn't quite as high as that suggests, actually, because one of the books was published rather slowly and the other published rather quickly. They came out so close together. But still, I guess, in a sense, my productivity is high. One of the things that I read is the way in which the internet has transformed thinking about this kind of thing. And I'm a kind of information magpie. So there's lots of stuff always somewhere at the back of my mind. And the difference that internet has made is one used to think, didn't I read something about that somewhere or other a few years ago, might be interesting. And I or someone else would have to spend an afternoon in the library trying to track that down, and often would not succeed. And now you can get into that in a few minutes and say, yep, that's what it was, that's how it happened, or this isn't actually worth pursuing. That's made it an awful lot easier to manage this kind of thinking and research.
But do you keep a note of those ideas that pop into your head where you think, okay, I should look into this? Or do you immediately go and explore it? Or do you keep kind of a note of it to kind of go back to? Or
it's popping into my head when I'm working on some topic that it comes to one's mind, wasn't there something about this that it would have been interesting? I mean, like in Musing case, we came up with just, I have a couple of research assistants who work with me. Musing case we came up with this week. As we were talking earlier about shareholder value story and executive remuneration stuff that followed from that. And that the classic article in that was by Jensen and Meckling way back in 1976, Theory of the Firm, that set everyone down this route. And I thought, isn't there something strange about Mike Jensen that he's taken some rather different views recently? And the story turns out to be very interesting when you pursue it, that Jensen was introduced by his daughter to a kind of self-help guru called Walter Earhart, and had a kind of epiphany, and has since been writing about, sounds like a big shift actually to talk about integrity, but that's the subject of his most recent writing. And the story of the self-help guru, Werner Earhart, turned out to be very interesting in its own right, because he was basically driven out of the US after expose by the CBS documentary and was audited by the IRS for tax abuses. And he was accused of tax avoidance and various kinds of sexual abuse of various kinds. And it turned out all that seems to have been untrue. And there's a further theory that he was a victim of a campaign by Scientologists to discredit a competitive self-help.
Oh my God. Okay. Yeah.
It's the way in which all this unravels when you start just pursuing an idea that is somewhere at the back of your mind.
Yeah, and you end up there.
That's a story that within a few days we can now put together, which used to be much, much more difficult to do.
Yeah. And, you've written lots of books. Presumably you read lots as well. I mean, what books would you say have influenced you the most, either in your work context or at a personal level?
I think the book that has influenced me most in recent years has probably been Joe Henrich's book, The Secret of Our Success. It's in a way a technical title because it sounds like it's another self-help, which it absolutely is not. It's a story going back to these issues of we're naturally competitive and cooperative, and the ways in which what we describe as collective intelligence has been essentially the factor which has driven the economic growth of the last 2 centuries. And that, of course, is a very different story from the market fundamentalism, just one that says about people being very greedy and pursuing their own self-interest with as few restrictions as possible, and very much drives home the fact that it's our cooperative capacities that enable us to build Airbuses. And I use that example because literally no one in the world knows how to build an Airbus, but 10,000 people working together do. And that's really something that only humans can achieve.
Yeah, no, that's true. Well, I think on that kind of somewhat optimistic note, I think we can wrap up this conversation. We've covered a lot of ground. So I just wanted to thank you. But also I wanted to ask, how could people follow your thoughts and such?
And they can go to my website, which is www.johnk.com. That's the easiest way to follow me. And they could buy, well, especially the two most recent books, which Greed is Dead and Radical Uncertainty, which are available on Amazon and all good bookshops, as they say.
Yeah. I'll make sure to include links to the books and also your website as well on the show notes of the podcast. So with that, thank you very much, John. That was excellent.
Well, good to talk to you.
Thanks for listening to this episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a rating and let other people know about the show. Also, sign up to become a subscriber to our research at macrohive.com. We'll be back soon, so tune in then.